Welcome to the big show. This is Investing with Confidence. I am your host, Joshua David, and we are happy to have you with us today. As always, I do have my great friend. He is my great pal, and he is the one and the only Mr. Al Connickson. I got to give this for you. How you doing?
Joey Tribbiani, for those of you that don't know what he's talking about. I'm doing very well. How are you doing?
I'm doing fantastic. It's always great to be back talking about the financial markets, how they work, and how us as the average investor can participate, but mostly helping our listeners to hopefully make better investing decisions. And today we're going to cover a lot of different topics about financial literacy, or we should say lack thereof, right?
Mm-hmm.
We want to help us in America really understand more about how these financial markets work, how we can utilize them with multiple assets. Now, we talk about the stock market every single day, every single week. That's what everybody sees on TV. That's what's talked about. We're going to talk about some alternatives as well. So, Al, before we do that, I want you to recap what's been happening. Volatility in the past few weeks has been back. It's came roaring back. What's going on, and why are some of these big moves such great opportunities when you know what you're doing?
Well, yeah, we have seen some fantastic moves both directions here over the last couple of weeks, and really, it's based on a couple of things. It's based on expectations for another stimulus package. It's based on expectations for interest rates and inflation and what impact that might have on the markets. But, and the news seems to change almost daily. So you can't anticipate what's going to happen tomorrow as far as the news or what people's opinions are. And you really shouldn't be basing your investment decisions on that anyways. But the point is that we're going to have this volatility for some time, which creates great opportunities. What really is happening is every time we see something happen in the news, it's reacted to. And those reactions are typically very short-lived. But what they do is they move the price of the assets, individual assets, and the markets into buying zones and selling zones quicker. So it actually is a great advantage for us if we know how to identify those zones.
And just to clarify that, the volatility, that just means movement of price.
Sure.
In the speed of it.
Yeah, really. It's kind of gotten a bad rap, I guess, that word. People look at it as being a negative.
That's what the kids are saying anyway.
Yeah, but it really is not. It just creates better opportunities, quicker opportunities for us. So I guess, the reason that people might be listening to the show, Josh, is number one, they need or they want extra cash now, and they're looking at the financial markets as maybe a source of that. Or maybe they're planning on retiring, which everybody's going to do at some point in time, and they want to know on what. Maybe they need help in both of those areas, and that's why they're listening to the show. And understand there are hundreds of sources of financial knowledge out there. You got newsletters, TV shows with the talking heads, and typically they never all agree on the same thing anyways.
It's great TV, though.
Yeah, it makes for good TV, and that's why people look at it. You've got YouTube, bookstores, libraries, and then financial advisors that will tell you that they want their clients to be educated, but really it's limited knowledge, maybe based on what they're biased towards investing in.
Mm-hmm.
And their goal really is to take control of your money, not educate you on how to invest it yourself. That would be, kind of against what they're looking at doing. But almost always, if you go to a financial advisor, if you're looking at Wall Street to help you, even though your needs and your goal might be to generate some additional cash for you now, it's a long-term perspective. That's what most of them actually will put you into. Something that's long-term. It's a buy and hold strategy with a buy-only bias, which requires the market or the individual assets to go up before there is any opportunity for you to realize a profit. So ask yourself this. What happened to your accounts, or maybe your parents' or your grandparents' account in 2000 and 2008? How much of an impact did that have on their lifestyle? Because we had two pullbacks during those time periods where the S&P was down over 50%. Even in the 2020, the beginning of 2020, we had a 34% pullback. How did that impact you? And then, a lot of people say, well, but the market came roaring back, and it did. From March of 2020 through the end of the year, the S&P was up about 70%, a little more than 70%.
Mm-hmm.
But for the year, if you go back January to the end of December, the S&P was only up 2.9%.
Yikes.
Why am I bringing that up? It's because That's the kind of return you get with a buy and hold strategy where you ignore downturns. You're not trying to protect yourself. You're not trying to participate in a way that's beneficial to you. And that could have had a major difference in the returns you could have had you known how to identify kind of the turning points in price. That's what our core strategy does. And what's important, it's the foundational strategy that our students use to time changes in the movement of price. And really, when you think about it, what's the real value in being in the markets? Number one, it's identifying when something is going to move in your favor. And number two, move enough for you to have a profit that's worth taking that particular trade or investment.
You're exactly right. I mean, you brought up some really good points there about what is really happening with the average person or the public with their capital when they're being managed by somebody else. Now, if you think you're listening right now, what are some of the things that we've been conditioned to do? I mean, just think about this. What is the average, or what is most advisor or broker going to tell you is a good return? Well, I'll give you a couple seconds, but it's probably going to be 6 to 8%. That's all you can get in the market, because the market has gyrations. It goes up, it goes down, yada, yada, yada. Well, that's a conditioning. They're conditioning people. Okay, that's all they can get because the markets do have that. Well, think about this. Do we have a retirement crisis? Can people retire on their terms? People cannot retire on their terms. People are struggling with retirement. Well, what if you were able to make better investing decisions prior to retirement and then better decisions during retirement? Would that help you get there and stay there with more confidence? Think about that. And then who has your best interest in your future, or that pathway? Whatever your objective is, it's going to be you. It's not going to be somebody else. It's not going to be a stranger. It's not going to be somebody that maybe takes you out to dinner once every 3 years, right? Because they're a nice person. So if you want to learn more about how to take more control of that pathway, take more control of your future, you got to learn the skills and the techniques. These techniques that the smart money is using, there's a reason why they use them. Here's the great thing for us. They are also available to us. Al, we have a lot to cover here today on investing with confidence. By the way, we're sponsored by Online Trading Academy. And I want to get into, you brought up some interesting topics about what's really happening with people's capital and it's being managed. I want to talk about retirement, some pros and cons of being able to do it yourself, but also versus having it managed. We'll be right back.